They're like, we live. We're about to be live. Hold on, we're coming.
We're live. All right, so we are live, and I just want to make sure that we don't get double sound.
Okay.
Well, it shows us as being live, so all right. All right, so I just wanted to welcome everyone to the Trade Speakeasy, and tonight we are having bonds and wine conversation with Lakeysia Briscoe. And just as a bit of background, so Lakeysia and I met about 3 years ago, and over the seasons, we've both been in a number of groups where we have, where I pretended to believe that I could learn how to trade futures. But, options is so much my wheelhouse, and I love it, and I'm successful at it. So it was always one of those kind of balancing acts where, you don't want to try to do too many things and then do so many things that you're just not good at it. And instead, I just thought, what's healthier for the Trade Speakeasy is to bring in experts. So people that have a diversity of kind of talent and interest and experience. So over the last couple of months, those of you that are in the Trade Speakeasy, you might remember last month we did charting with Larry, the unknown trader, and we will continue to have people joining us at the Trade Speakeasy, either in private sessions or on the YouTube channel, to present their own expertise. And it's been a great experience having had Larry on the unknown trader last month for our 2-part series on charting, and now to have Lakeysia join us talking about bonds and how to trade futures. Since I'm in Germany and it's already 1 a.m., I actually am going to be joining with water since my kids have activities early on Sunday morning, so I prefer to be present as fresh for Sunday morning. You can't go to church looking like you only had wine about 5 hours before the morning service.
It's early communion.
There you go. But for those who are joining us, I hope you have your glass of wine ready, and I will pass the mic over to Lakeysia.
Hello, welcome. I have my wine. Don't necessarily have any grub, but the wine is here, so it's all good. Thank you so very much for having me.
Sorry, everybody get in the chat. Let us know where you're tapping in from, and if you have any questions, I'll be monitoring the chat so that I can come back to Lakeysia and get those to her in a easier fashion, so she doesn't have to monitor that herself. So back to you.
Cool. So I'm gonna go with the flow and kind of give you an introduction into like futures and stocks and kind of act like my audience has no idea. And then we'll build on that. And if you have questions, I'll probably be talking about at the end, because I do love bonds. It's where I started. I'll talk about the bonds, what I think about the bonds for next week, and how I actually view the market, doing a top-down analysis for next week and how that looks. So let me go ahead and start off. My name is Lakeysia Briscoe. I am a futures trader. I am also a mentor and coach. I have a program called My Jamii Life, and I also partner with Kingdom Wealth, and we both teach futures. I am more of a handholder. And so I am really about making sure you understand the fundamentals, because if you can understand the fundamentals, then it doesn't matter what you trade as far as price action. I am not a fan of news trading. So I am more of price action, where price is, where it's going, how it looks, where support is, and things like that. With Kingdom Wealth, it is more of a self-paced kind of program, but we both partnership with each other so that you can have a little bit of both. We have our morning London session, live trading. I am taking over the Asian session right now while Darius is being deployed. And then we also have another mentor who is the unknown trader. And so he has a Telegram and they do the US session sometimes. So our community is huge, right? And so I just want to say thank you to everybody for coming out. All of our supporters are coming and hanging with us. And I know most of you probably already know this, but this is for those who don't know me and don't know us and kind of need to know a little bit more about futures and know that it's totally affordable. Because a lot of times people think futures can't afford it, it's not within their realm. And when you actually look at it, I am not a fan of learning on your own dime. I am more of a, yes, you do have to put risk. Sim is great, but the market doesn't come for you in sim, right? So I am more for making sure you put some risk on the table. You have to put yourself in a predicament where you have something to lose. So I am more for prop trading, learning the system, learning in a prop environment, right? So that you can learn to trade within parameters. And if you can learn to trade within parameters.
So for those that haven't actually traded, so I've never traded in like an evaluated account or with a prop firm, but I know a bunch of y'all do in the Telegram group and with Jamii Life and Kingdom Wealth. And so just for those that have never traded futures, they're, each like the different accounts, they have different rules and regulations about how many contracts you can trade, what the drawdown allowance is. So how essentially the drawdown would be how far price can move against your position before it, is counted against you. So there are some rules that kind of force a bit of, what's the word? Maybe like discipline. Yeah. That force a bit of discipline. Now, some people don't like that because they feel that it creates a heightened sense, like maybe an overly heightened sense of awareness to like what you're trading and a nervousness if something goes against you, but you can't like stay in the trade. But for other people, especially for newer traders, those parameters are really good. Like it's kind of like having the bumpers on at the bowling alley. And so, we don't necessarily have that on the option side. And sometimes I wish we did. Like sometimes I wish we just had those rules so that you always knew that the people you're mentoring had like a capped potential risk like potential, which you don't have in options. And so
you have a trading plan, and the trading plan says my stop loss is 30%. Like when I go to 30%, I'm gonna get out. But most of the time we're watching it and it's at 30%. It's at 50%.
Something I've even learned about myself is that I don't always have good parameter like trade rules, because actually I'm not always at my computer because I have kids and the US session is in my evening. So that's part of the reason why I trade structured options, is because that forces the rules into the trade. Like my trade, I already know what my max potential loss is and my max potential reward, and I have my closing order in after I get my order filled. But having the prop firm can really embed some good fundamentals. I think I haven't done it myself, but from what I've heard from all of you,
there are a couple of prop firms that are looking at options as a entity to be able to have traders trade options. And if you can stay within the parameters, just like in futures, if you stay within the parameters, they will fund you an account so that you can trade options. So that is on the horizon. There are a couple of companies that are tinkering with that. But when I hear more about it, I will definitely let you know. But it gives traders the opportunity to learn and leverage money that you normally would not have to be able to get into the market. So let me go ahead and kind of share my screen, and then I'll go through a small little presentation, and then we will go into, let's see, then we will go into, where are we? There we go. Let me move our beautiful faces down. All righty. So welcome. Y'all see, I got my wine in one corner, got my bulls and bears in another corner. The thing that I love about futures, so I started off as an option trader. So I still have PTSD with options, But I started off as an options trader.
Oh, I gotta bring you back. I gotta bring you back to life, make you feel okay. But you're so excellent at futures that you really do not need options trading. You're a brilliant futures trader. So I'm
It
not
was,
discouraging you from your excellence.
well, you know what? It was more of, I started off with options, and once I realized it wasn't necessary, my direction was fine. I had direction down. My timing was off, and then with options, you could be right, but if your time is off, it does not matter. And so I was like, oh, this isn't working. Well, after I lost a lot of money, I figured out this isn't working. So then I pivoted over to futures. And when I first started learning futures, I was like, oh, it's kind of expensive. But then I started off with a gentleman on Facebook, and he taught me the basic core, and I was like, "Ooh, this may be a little over my head." Then I pivoted over, and I met Jada Trader and went through his program. And then I was more of, okay, this is more my speed. And so my first baby is the bonds. Like that was the first thing I learned. And it's funny, I went from the bonds, which is slow as molasses, and then I pivoted to the NASDAQ because I could see patterns in the NASDAQ. I mean, she was fast, but she was real structured. So I could see higher highs and lower lows happening on the NASDAQ. She was quick, but I could see it. So I went from really, really slow, very structured. The bonds gave you enough time to figure out if you were right or wrong. You could really see the market. And then I went to an extreme with the NASDAQ, and I love the NASDAQ, but I'm really in love with everybody. But the bonds is my first love. So we'll talk about the bonds today. So I just want to give the risk disclaimer, always telling the risk disclaimer. Everybody will tell you that all information provided by Kingdom Wealth, well, this is actually Jamii Life, is for educational purposes and was not constructed for investment advice, purchase, sale, securities, options, futures, forex, or any other financial instrument of any kind. Trading involves a high level of risk and may not be suitable for all investors. And I really would read all of that, but I'm just gonna give you a minute while I take a sip so y'all can know. Risk disclaimer, this is educational purposes only. All right, everybody got that? Cool. Topic of discussion, we're gonna talk about futures versus stocks, and then we're gonna talk about the advantages of futures and stocks, and then we're gonna talk about the advantages of stocks versus futures. So futures versus stock. Futures, this is pretty much contracts to buy and sell a particular quantity of a product at a future date, commonly known as commodities. The contracts have expiration dates and are not kept beyond that date. So your futures contract can be bonds, it can be the NASDAQ, which holds most of your tech companies. It could be the YM, which is the Dow, and it holds your top companies. It could be the ES, which everybody loves the ES, which is very, very liquid. It could be the CL, which is oil, which we like to trade. And they're all future contracts for future dates. Now, stocks, you actually buy a share of a company, and also known as security or equities. Once you buy a stock, you own it, right? For as long as that company exists. So there's two ways to make money. You can buy, we call it going long. You purchase it and sell it at a future time for a higher price, or you can sell it, which we call going short, and you sell it and purchase it back at a future price for a lower price. So you can do that via futures, or you can do that in stocks. Now in futures, you enter a contract to buy a quantity of a particular price at a specific date. Now for stocks, you're buying an actual portion of the interest in the company. So you can buy one stock, you can buy two stocks, you can buy as much as your investment allows you to buy in stocks. Now your cost for futures, the paid price for the contract is not the full value of the contract, and the size of the account needed varies depending on your broker. Now your stocks, the money that you spend is per stock and is at the cost that comes directly from out of your account. So whatever that stock is currently, if Tesla is currently selling at $175. You need $175 in order to own one share of Tesla. And so that comes directly out of your account. We also have going short. So selling in the market. For futures, you can enter quantity for a contract and buy that particular contract for a price in the future. And then for stocks, you're actually going to borrow shares from a particular stock in your broker or your finance agent. So you have to borrow that when you're doing stocks, not necessarily when you're doing futures. Now, when you're covering a short, for futures, the contract will have to be bought back at some point in time defined by your broker before the expiration date. For us that trade futures, a lot of us are day traders. So you're trading a contract and it's going short. We're doing it and we're trading within sometimes seconds, minutes, the hour, but you're trading that same day and you need someone who wants to buy the stock that you're selling at that price. Now, for your stocks, the stock that you sold will have to be bought back in order to give it back to whomever lent you the stock in the first place. Somebody has to lend it to you first in order to sell it to someone. So that can become kind of sticky if you're only allocated so much to sell in stocks. The futures and stock trading times, most futures are open 23 hours a day. There's a comprehensive list that can be found on the website down below. Stocks can be traded 12 hours a day and are broken down in the pre-market, your normal hours, and then in after session hours. Now, a lot of people trade options. Options can only be traded during normal business hours. So that was one of my things about options was, oh my God, pre-market can be so beautiful. But by the time the market opened, yeah, you may not be in the money anymore. So our trading hours, there are pit sessions for the bonds and for gold, oil. For gold and the bonds, the pit session is 8:20 to 1:30, and actually bonds goes all the way to 2:30. Our crude oil session is 9 a.m. to 2:30. Your indexes go from 9:30 a.m. to 4:15, and then there's 15 minutes later that the stock starts trading in those markets. So futures market, like it's 23.6, and then your regular stock trading, you have your pre-market hours and you have after hours, but you're very limited as far as your time when you can exchange and buy and sell stock. So the advantages of futures versus stock. You have a lower initial account equity required to day trade. There's no pattern day trade for futures. There's a 60-40 tax advantage. I am not a tax preparer. You do need to talk with an official tax advisor. I'm just going to give you a little tidbit. There's 23 hours of open market time with futures. There's no limitation for short selling like there is in stocks. There's leverage, and then the margin day trade margin. So the advantages to your stocks and initial account equities for futures, you can start trading. And I say as little as $3,000 to day trade. We trade prop firms. You could invest in a prop firm, buy an account to do the evaluation for as low as right now, it's like $18 to do a $50,000 account. And once you pass that evaluation, or you have to take it again, but once you pass the evaluation, you pay a fee. There's another $155 to activate the account. They will let you trade $50,000 worth of futures, right? Now, I always tell people they give you a $50,000 account, but you actually are trading what your stop limit is. So they give you your target is $3,000, your stop loss is $2,500. You're trading $2,500 worth of capital, not $50,000. Yeah, they give you $50,000 accounts, but your actual capital is $2,500. So I put as low as $3,000 to day trade. Your stock, in order to not be a pattern day trader, you need to have a minimum of $25,000 in your account. so that you could trade freely, right? But if you don't have $25,000, you have to have your account as a cash account, and then you can only trade as much cash as you have in there. And then you even if you win your stock. So some people trade stock where they buy so much stock, they wait for the stock go off and they trade and they make a little money and they sell it and they make a little money then. Well, you have to wait for that to, get back into your account and you can trade the next day. So with stocks, if you need at least a minimum of $25,000 in order to trade stocks. What is a day trade pattern? So the Exchange Commission set the rules to try and protect investors and traders from themselves. Thank you. No. If you make 4 round trips in and out of the same stock in the same day or within 5 business days, you must maintain $25,000 in your account. Now, it doesn't have to necessarily be the same stock, but if you make 4 round trips within that 5 business days, then they'll flag your account. So you kind of have to do some constructive math and some constructive trading to avoid being caught up in your day trader pattern. In futures, you don't have that. You can trade as much as your capital allows. So there are no restrictions on round trips. You get in and out, and your money is there. So you don't have that type of restrictions on futures. It's a 60-40 tax advantage. So 60% of your profits are taxed at a long-term capital gain of 15%, and 40% of your profits are taxed at a short-term capital gain. So depending on how you're trading for futures, say you have $100,000 in profit, 60% of that, which is $60,000 times 15% is $9,000. And at 40%, which is $40,000, will be taxed at 15%, which is $6,000. So your total tax bill is like $15,000. Now with your stocks, if you have $100,000 in profit, 100% of that will be taxed at 25%. So if that's taxed at 25%, your bill is $25,000. So you do have a slight tax advantage from trading futures than you have with trading stocks, right? So stocks, you need to have at least $25,000 in your account and you're going to be taxed 25%. Now, you don't need as much in futures and you get a little bit of a tax break on how your shorts or longs are going in futures. So a lot of times people who swing futures, they like the tax break a lot better over there in futures. Okay, sorry guys. I lost connection for a minute. Let me see where I am. Okay.
The last thing I saw from my side was where you were doing the taxes with the futures.
Again. Okay. I was like, wait a minute. Y'all know I like to talk with my hands, and all of a sudden I was like, what are we doing? All right, there we go. Okay. So there are 23 hours of trading time. So that's less of a gap up and gap down if you're trading futures. There are 4 distinct sessions, which is the Australian, the Asian, the European, and the US. I like to trade the Asian session and the European session, the London session, and there are more opportunities for flexibility with your trading hours. It's very hard, like Suzanne was saying that, she's in Europe, and when the stock market is open, it's pretty much a different time for her. So she doesn't have time to actually monitor and look at the market. A lot of times we are normally doing a 9 to 5, of course. And during the 9 to 5, it's really hard to monitor the market, especially if the market is open from 9:30 till 4 o'clock while you're at an 8 to 5. It's hard to monitor the market while you're working a 9 to 5. So for me, it's better to trade the Asian session or trade the London session. Hey, either one of those, money is to be made. And so those fit within my schedule, and the US session is a little chaotic, so I tend to stay out of it. So there is time in the futures market to make money at any point in the given day, right? There's no limit on short selling. So some stocks aren't available with the quantity to short sell, or it's limited quantity. So if you wanted to short, one of these little penny stocks or something like that, you would not have the opportunity because they will only allocate so much of the stock in order to short sell it, right? There's no uptick in futures, and the only limit to short selling in futures are the amount of buyers available. So if you're shorting, you need a buyer to buy it. If you're buying, you need a seller to sell it to. So it makes it a lot easier in the market to, especially with futures, to be able to exchange in those contracts. Leverage. There's leverage everywhere that you need, especially in the futures market. The availability to control large dollar amounts is comparatively small in your capital. For example, it's possible to control $100,000 worth of 30-year bonds with just $500, right? So if you're in stocks, you need that much money. You need $100,000 in order to control $100,000, right? But with futures, you have leverage in the margin where you put up $500 and they will allow you access to capital to trade $100,000 worth of whatever entity or commodity you are trading. So what is a margin? Basically, it's a loan from your broker that enables you to buy and sell at a greater quantity than you would actually afford with the cash in your account. So if you have $3,000 in your account, and right now I trade on NinjaTrader, it is an exchange broker. And in order to control one contract on the ES, I need to have $500 in my account to control one contract of the ES. Now, if I was trading on TD Ameritrade, I need to have the entire $15,000 or $17,500 in order to control one contract. Now, doesn't matter if I'm trading on NinjaTrader or if I'm trading on Thinkorswim, TD Ameritrade, each tick is $12.50, whether I'm holding it for $500 or you're holding it to $17,500, because I'm holding it for $500. The way I set up $500, but you could be holding it in TD Ameritrade for $17.50, right? But as the market moves, they're called ticks. So each tick is $12.50. We're both making $12.50 regardless of where the market is going. You just require more leverage and more margin than my broker does. So finding a broker is very important because those margins, they matter, right? The margins matter, but the ticks are the same. So margins are how much they allow you to borrow, in order to maintain that kind of leverage. So in futures, it varies depending on your commodities and your broker, right? And stocks, it's up to 50% to 2 times your account and what the margin is required. And if it's allowed to day trade, stocks up to 200% or 4 times your account. So it depends on stocks and futures on your broker and how much they allow or how much they require you to have for margins. Futures can be as low as 500. We talked about the bonds. And I think the bonds, the ZB and the UB are currently $1,000. The TN, the 10-year notes and lower are 500. For stocks, it's 2 times the margin. So you need 5,000, you can buy $10,000 worth of stocks. So it depends on what your margin requirements are. For futures, so with $5,000, you can purchase up to 10 contracts of an equity or bond or currency. With stocks, if you're allowed 4 times the margin, your 25,000 could purchase up to $10,000 worth of stocks. So the advantages of stocks, I told you about the advantages of futures because that's my baby over there. But there are some advantages to stocks versus your futures. So stocks, you could start off as low as $50, right? So during 2022 or 2021, stock market was down. People were buying Apple, they were buying Tesla. I think at one point it had Nike at $50. Like the stocks were really, really at a very great price. And then futures, the minimum to open accounts, some of them are $3,500. NinjaTrader only requires you to do $300 to open an account. But again, you need $500 in order to do one contract of the ES. And yes, we do have micro, so we'll talk about that a little later. But to open a minimum account in some of these futures, they require you to have $3,000 to $5,000, depending on your broker. Long-term buy and hold for stocks, you buy it, you own it for as long as you want, right? Futures, contract expiration limits how long you can hold it. So there's an expiration date to every contract. You're able to hold it until that. You can roll it over, but there's an expiration date on every contract that you get into in futures. Risk, assuming you start your account with $5,000, how much you can actually lose versus the same amount is on the stock. So warning, you can lose more money than you have in your trading account in futures. You can lose more money than you have in your account trading futures. So for stocks, you buy 5,000 worth of stocks, that's your maximum risk. You can't lose more than that. You put in 5,000 into the stock market, it tanks, hey, that's what you lose. You buy one contract of gold at $1,300, and if it falls $100 to $1,200, you just lose $100, right? Now, if the stock goes to zero, your account goes to zero. In futures, if gold drops to 10,000, you had 5,000, your account goes negative 5,000. You lose the 5,000 you had in there, and now you owe your broker another 5,000. So in futures, you can actually lose more money than you have in your account. Hence why I am not a fan of you learning in your own with your own capital. These prop firms, they're going to make sure they're not in the hole. They're going to make sure if you break their rules, they're not going to lose any money. They will cut you off first. That's why I'm a big fan of prop firms. Now, these equities, I told you, to hold one piece, one contract of the ES, you need to have $500. But we also have future contracts that are micro, so it's 1/10 of the ES. So while you need $500 to hold a full contract of the ES, you need $50 in order to hold a micro account. The NASDAQ, the Russell, and the Dow all have an equivalent of a micro. So if you feel like utilizing a prop firm is not for you because it doesn't really feel like you have any risk on the table, another way to live I would only suggest that once you're capable
I
of
think we
keeping up.
lost you for a minute
Uh-oh.
at the beginning of this slide.
Okay, at the beginning of the slide. All righty. How was that? Is that better? I could have been on a drink break.
Yeah, exactly. So,
Okay. So I was
but
just
this
saying
is
that.
so important, the difference between the contracts and the E-mini, so the micro. So I was like, oh, you got to come back to it.
No worries. So I was just starting off with how if you are trading the ES, it requires you to have $500 worth of capital. And each one of the indexes have an equivalent of a micro. So the ES has the micro ES, the NASDAQ has the micro NASDAQ, and then the Russell has the micro Russell, and the Dow has the micro Dow. The ES, the Dow, and the Russell only require $50 in order to trade one of your micro accounts. The NASDAQ does require you to have, for an actual NASDAQ contract, you need $1,000 in order to have one contract. So you need $100 in order to do the micro NASDAQ. So it's 1/10 of what you need in order to trade your micros. So if you're the type of person who feel like trading a prop firm does not add a sense of risk on the table, and if you feel like you need to trade your own capital, Okay, if you feel like you need to trade your own capital, then I encourage my traders to do the micros. And if you can grow a micro account, right, then you can advance yourself into, the regular e-minis and trade those accounts. But a lot of times people feel like they have to have risk on the table. And while I can understand that, the micros lets you have risk on the table, but it does not put you in serious. Now, mind you, it can put you in jeopardy. When I first started trading, I wanted to trade live account, and I went and I traded the mini NASDAQ, and one contract is $100. One tick of a micro NASDAQ is 50 cents. So I was like, it's 50 cents. So each movement for 1 point is 4 ticks. So I'm like, oh, I can do that. Mine's $2 per point. Man, I ain't never lost $100 so fast. Before I knew it, I was down $100 in the NASDAQ. It was quick. I mean, she snatched my wig. It was like, and I was like, okay.
I think we might have lost you again. So we'll wait for her to come back on. Are you back with us? Okay, there you go.
I am back. I'm like, I might have to connect myself through my phone. Oh, nice wins in Dallas. There we go. Okay. So did you catch the story about how much I lost, how fast I lost $100 on the next
Well,
day?
I got the beginning of it, that it cost $100 to get in, and
It cost
then you were shocked by how fast it was $100.
I was down $100. It was quick. So it didn't even give me time to like react. So you have to be respectful of the micros also, right? Because it does add risk on the table, but it's risk. It's your live capital that is at stake. Unfortunately, a lot of times people have to lose their money in order to realize maybe I need an environment that is not going to be as costly to me. So let's go through. Most of the indices do have a mini and a micro. Gold has a mini and a micro. So a lot of times traders will trade gold. Each one of their tick size is actually $10. So each movement of gold is $10. And there's a correlation between the ES and gold. A lot of times people will look between the two. And if gold is going up, most of the time the ES is going down. The bonds used to be inverse, just the same, but sometimes they tend to go the same direction. So a lot of times I used to be real dependent upon looking for the inverse. Then I became dependent upon looking at price action, and then going what price was telling me and not necessarily relying totally on if they were inverse to one another. So gold is $10
really
for each tick of movement.
Because now everything in the markets is disjointed. So many trends or correlations that people had just relied so heavily on have just shifted. So it's nice to know that it's not just those of us on the equities side that you guys feel it as well on the futures side. So it feels like, okay, we're all still in the same market somehow. It's confusing all of us.
I know. And I would just be like, okay, now who's not telling the truth? Right. And then I'm like, whichever entity you are trading, that's the one that's telling the truth. Like, look deeper into that one. So I had to focus on who, what, where, and why, and not necessarily who's moving which way. So each instrument, each commodity, each tick movement, it varies and they're different. So I may have mentioned that the ES, each tick movement is $12.50, and it takes 4 ticks to make 1 point. And y'all know I'm not good at math, but $12.50 at 4 ticks, that's $50 for 1 point. Gold, each tick of movement is going to be $10. So there are 10 ticks for each point of gold. So a point is $100 in gold. I also like copper. If it's moving, if it's trending, I am probably going to trade it. I'm an equal opportunity trader. I like trending markets. So if the ES, which is currently only moving 45, 50 points a session, is not moving, I'm not trading her. Been trading oil because it's trending. I like copper because she trends. If she's not trending, I'm not trading her. I love the bonds because she trends, and when she trends great. But currently, the bonds will normally, and the ZB will normally move a point. Like she'll move a point and a half normally. Last week, she's barely making a point. The UB, which is the ultra bonds, is barely moving 46 ticks, so a point and a half. And normally she's moving 3 points. So you can see the bonds are consolidating and not moving as frequently and flowingly in the market. Neither is the ES. The ES, I mean, I know last year we were moving 100 points a day, which is totally not the norm, and we knew it wasn't the norm, but it became our norm for the ES to move that much. And so now the ES is moving 46, 50 points a day, and everyone's like, what's wrong with the ES? He's correcting yourself, right? So that is pretty much me talking about how much the different equities are, what their ticks look like.
With the consolidation that you've been seeing in bonds, the way we've been seeing it, so we trade a lot the SPX with our options, especially those that are in the Butterfly Society. That's kind of our daily bread and butter, and then we like to trade some other equities around it. But with the consolidation, how has that actually affected your ability to do price action trading? Does it impact it at all? Or
it not necessarily. It does if you are a time trader, right? A lot of people trade time. And with the market consolidating so much, it's hard to catch the expansion. So you really have to, and it's funny, our community, we have really been focusing on oil and the open trade in oil. And I've been focusing on everyone's open trade, like, because I want to trade during volume times. I want to trade when it's going to be trending. And a lot of times that consolidation happens right before different markets open up. So those opportunities come available when Asian market opens up, you know, when the London market opens up, or the US. I don't play with the US too much, but when those markets open up. So if you are not available to trade sometimes during those times of volume, it kind of limits you. And I'm not a really good consolidation trader. Like,
I don't think anybody is. I think that's everybody's huge complaint of this year.
I am not.
Range movement is really painful.
It is, and you, because by the time I'm in rhythm, it's changing, and so a lot of times I like to tick count or point count. So the push and pull that happens with the market is more of my thing. So in the ES, I'm normally waiting for her to go 3 points, pull back, 5 points, and go. She's not following through. So it makes it hard to wait for her to go 3 points, wait for the pullback, and catch the 5, right? So that push and pull that the market gives, I am a retest trader. So it makes it really hard. You have to recognize what the market is doing. And so once I realized that the ES was not moving within her normal range, I was like, I don't want to play with you. Like, it took a minute to figure out why I was getting my head bumped. And then I was like, we're going to move over to oil because
all right.
At least she's flowing. I think 2 weeks ago, everybody decided that they were going to be buying oil in different currency, and we had this huge gap up, but it was still a trending market. It was still free flowing, and she's still moving a regular range. So for me, if the markets, the equities, commodities are not moving and they're stuck in that consolidation, the one thing I like about futures is I just go look for who's trending. Somebody's trending. I don't care if it's hogs or copper or lumber. Sugar's out here being great.
Yeah, sugar is at like an all-time highs. I don't know what this is about. Well, I do know
Right.
what this is about, but I'm just saying it's shocking that what things are now starting to hit those all-time highs. But it's actually encouraging to know that learning price action trading for futures actually gives you a lot of diversity, because you can implement those strategies and the technique on multiple different underlyings. So I know for a lot of people, when they first are introduced to price action trading, some people are introduced through like, the Al Brooks books. I know I've heard him. I haven't read any of his books, but I've heard from a number of traders that do price action that he's great, or
It's
they
amazing.
learn like candlesticks, or or maybe they learn from like ICT. But sometimes those are really complex layer stacking of information, and it becomes really confusing. And so you can sometimes get into these groups where everyone wants to mimic what another like lead trader is saying, and it's not pure price action, because they're trying to find a confluence of like 5 or 6 different things, but then they feel very overwhelmed. But to know that actually, if you just learn the basics of price action trading, then you can implement it on different underlyings, and you advantage yourself by looking for what's actually trending. So you don't have to be stuck on one underlying that's
Right.
range bound, when you don't have the technique to trade range bound strategies. And arguably, like futures trading is with them, you need the movement. It's not like options. With options, we have neutral strategies that actually benefit from the consolidation or the range bound movements. But with futures, there you don't have that. You don't have this like multi-leg building that can still make money when price is just flat or just going back and forth in a tight range. But it's good. I mean, I think that's encouraging for people to hear that, as you build up that confidence and, trading something like, you started out with bonds, you went to NASDAQ, then you went back to bonds, and now you're looking at, crude, or you're looking at sugar or other futures commodities. So I think that's positive for people to hear, that it's not like you learn this skill and it only works on the SPY and it's useless anywhere else. That's not encouraging. People feel overwhelmed by the info dump. But if you realize actually this is a skill that you can take and implement on multiple different underlyings, and it's a bit more encouraging to take the time to learn what price action trading is.
Definitely so. I mean, because it's more of about being diversified, right? And being able to, if you can find where the trend is and what's moving and flowing, and gives you more opportunity to get in and out of the market. The time of consolidation is really just very taxing on the nerves. And I always tell people, you have to weigh out your mental capital and what you're willing to stay. And me in consolidation, like for a while, I was like, I wake up, and if the ES at London had only moved about 10 points, the Asian session will give you 10 to 15 points. But if she was at 6 points, I'm like, I'm going back to bed. Like, she's not even moving in order to be able to make money. Yes, you can scalp it out, but I want to scalp with being able to have a range. And if I know for the Asian session, I know it's going to move 10 to 15 points. For the London session, I know she's going to move 20 to 25 points. And then the rest of the 75 points will be for the US session. those movements matter. If I come
Mhm.
into the London session, she's moved 50 points. I'm like, who's going to trade the US session? Because she's moved her average range during the other two sessions. So
Yeah,
knowing,
that's actually a really good point, because a lot of people ask me that when we, because of the whole gap filling, you know, when do you know if she's going to come back and retrace and then carry on with the move, or it's going to be like a gap fill and then kind of like sputter and do nothing. And so it's interesting to hear you talk about it from the future side, because that is the smooth, you know, the smooth move, like in the 24-hour period, there's not that time gap at the ES. So yeah, that's actually interesting for us on the option side to always remember that actually, you know, there is actually a daily range that, you know, the ES or the NASDAQ should move. And if it's, you know, made those moves or overshot their moves in the overnight markets for us, then, you know, in the US markets, then, you know, we can, you know, we have to manage our expectations about, you know, what is likely to go on, which I think a lot of people get frustrated and they're like, hey, wait a minute, I missed the whole move.
Yes, it's like, well, wait a minute. If the price gaps down, right? You know, if price gaps down and you're an options trader and you're like, and most options traders aren't paying attention to the overnight session, all they think is normally this, you know, this entity moves $5. Well, if it gapped down and it's $3, you can only expect $2 worth of movement, right? But if you're used to $5, now you're like, why she didn't move? Because she overextended. She tired. She ran all night. So
she's exhausted. Those heels got her going.
Right. So you have to know what that looks like. And that will kind of segue me into a little bit of so last time I was talking, we talked about options and I'm gonna put this indicator on for some of our guests. It's called the SATI or ATR. Now this can help with whether you're doing options, because I know we have some option traders, or if you're doing futures, right? So this will give you an idea of the daily range, especially let's look at the ES or your favorite SPX. So the SPX is just, you know, the option side of futures. But you can see that the SPX moves a daily range of 52, let's see, $51, right? So if it moves $51 and it's already moved so far $26, it's moved 50% of her move. So the expectation that you should have entering into a trade is that, oh, she has about 50 more bucks to move, right? Or if it's 26, y'all know I can't count, 30 more bucks to move. And that movement can be in either direction, right? So you definitely have to know where the direction is. So how do you know the direction? You start at a higher time frame. There's no need for you to be on anything lower as when you're day trading, especially when you're looking at how to determine how much more range you have, if you're bullish or if you're bearish. A lot of times you can look at the market and determine if it's bullish or bearish, looking at the easiest factor, especially during the US session, of where are we in relation to yesterday's price. Now, doesn't matter if you're trading futures, trading options and stocks. The basics is when you look at your entity, where am I in relation to yesterday? Am I above yesterday's high? Am I below yesterday's high? Are we close to it? Where are we, right? And then where are your key points to yesterday's price? What are your key points to yesterday's price? Yesterday's price, you want to know off of the daily what your open, high, low, closes are, right? So if this is the previous day, I want to know where the open was or where we closed at. Let's see. So I want to know where we open at, where we closed at, what the high was, what the low was, and then what 50% of yesterday's candle is. if we're trading 50% of yesterday's candle, guess what? I am probably short, because if we haven't made it above 50% of yesterday, then that just means that the bears are holding us down and they are currently dominating, right? If we are above 50% of yesterday's price range or price action, then I am bullish, just looking at where we are in relation to the previous day and what price is currently doing. And so a lot of times this Sadie ATR will give you a viewpoint of what price is doing, how much of the range the market is moving, and then give you an expectation. Because a lot of times what traders don't know is that how much the actual entity moves, right? So if we're looking at Apple, which is pretty much because I'm in futures. Let's go to stocks. If I don't know that Apple is normally daily moving about to, $3, and currently it's moved $1.96, I need to know how much that entity moves, how much that stock moves, in order for me to be able to profit off of it. There's no way I can have an expectation of that stock to move $5 when its normal daily range is $3.
That's a key point.
Right.
Unless expectations.
Exactly. Unless it's earnings or something like that, then those are the exceptions. And then if you're looking at earnings, you want to go look for the little E's down here at the bottom so that you could go back to when earnings were, and you can see how much earnings normally breaks out of the normal range. So you can have an expectation of how much the average movement is during that time. Those basic things, just with price action, doesn't matter if you're trading futures, options, stock. Managing the expectation of how much price moves would help traders so much, especially, just having the basic knowledge and in direction. Anybody chatting in the thing? Hold on one second.
Everybody's tracking with you, so they're feeling this. But no questions. Well, but if you guys have questions, hop in the chat on YouTube, and then I'll be able to shoot that over to Briscoe. I almost called you CBD, to Briscoe.
I told you, I answered to it all. Y'all know I'm really close with my family, so we came down to Dallas for my cousin's prom, and so they're at prom, and my aunts and them are partying in the living room, and I'm like, go tell them, be quiet.
No, I'm enjoying it. I'm like, there's some life happening in the background, but this is, so if you guys have any questions, please hop in the chat and let us know, because this is really, these basics are really helpful for those that are thinking about getting into futures, those that are trading options, but maybe right now they're not finding the type of trades that they would normally like to exploit. Then futures might be might be an option for them to explore, because of the fact that, like you said, once you have mastered that price action trading, then you always have that have the option of diversifying into different commodities and different instruments in the futures market, depending on what their margin not margin, but their contract requirements are. Some of them are quite expensive. But
sometimes you got to start in the micros. And right now we're doing a challenge in Kingdom Wealth where, it's basically $50 a day. That's the goal. And it's funny. So once we kind of started this challenge of just make $50 a day, everyone's on doing they're doing a prop firm, and they're trading either $25,000 or $50,000 account. And the goal is to make $50 a day. And then if you make $50 a day, 50 to 75 with the 50,000, then within 6 weeks you will be funded, right? It's no stress. Like, it's 1 point on the ES. If you're trading the open range with us on the CL open range gives you 7 ticks, which is $70, one contract. We're limiting risk, but we're making it easy, just kind of stress-free trading. And then the goal is to get funded and then repeat it, right? Take another 6 weeks to build that account. Because with the 50,000, the target price is 3,000, right?
Okay.
So if you bank 3,000 in another 6 months, we want you to leave it there, right? And then take another 6 months, 6 weeks, and bank another 3,000, because by the time we get to September, the goal is to have 5 different accounts where you're only going to take out 3,000 and leave 3,000, and then rinse and repeat.
Okay.
So never really taking the full money out, but easy trading, because for me, what I found out, I am a fan of learning. So when I tell you I go to different groups, I go to different trade rooms, I totally invest in what I want to learn. And what I learned was my my community and some of the people that trade in my community are truly the exception, not necessarily the norm. So I want to say I grew up around the exception. So looking at the norm, I'm like, I've gone to trade rooms and they can be on the NASDAQ and maybe trade 2 contracts and go 20 points. And they're like, all right, we did great for the day. All right, we're closing up. Everybody's gone. I'm like, what? What? But there are members in our community who go 100 points or 150 points, and yes, I can, I don't want to say I can only do it, but I can trade 100 points, but I need to go to sleep.
Yeah.
So I can enter into a trade when I wake up, I'm up and I'm like, okay, that's great. I can't sit and bake in it during the US session.
Yeah.
But once I figured out that the exception is what we are, and that I go to these different trade rooms and trade groups, and the norm, the consistency of just watching the norm, I'm like, you can do 20 points. I mean, the NASDAQ will spit out 20 points.
Just
It's
give it to you.
right. She's like, there you go. And if you catch her good, 20 points is easy peasy. And the same with the ES, 5 points on the ES, 3 to 5 points is great on the ES. But I'm used to, well, the ES was moving 100 points, but I'm used to some of our traders catching the whole US move. So if you're used to the exception, sometimes the norm kind of seems, and I'm like, if you master your own discipline and start off small, because a lot of traders, I found the ones who like their job, aren't trying to leave their job, they're just supplementing, they do well. They do well. Those who hate their job, don't like their coworkers, is like, good God, got to pray every day to get out of the car. Those have the struggle.
Yeah.
And the struggle is not necessarily that they can't trade. It's that they can make the money that they make at that 9 to 5 in less than 20 minutes or less, and they won't take the money.
Yeah.
Some people will say, my trading plan says I need to make $200 a day. Our group, we are only saying $50 a day, but some people trading plan will say, I only want to make $200 a day. And you see 200, but you won't close the trade out. But when it goes down 200, you're still holding on. It goes down 500, and now you're ready to close. No. Sometimes I mentor a lot of traders that it's not that they can't trade. It's that they can't master their own emotions and their own discipline. So a lot of times,
I think that's a lot of people's. No, well, I shouldn't say that. I have learned that there really are people that cannot trade. And and they like to tell other people how to do it. And I think that's entirely unfair. But I do agree with you that there are a lot of people that master how to trade and then but still need to master the trade management so that they know like when just to take the loss. Because I think a lot of people, especially with range bound movements like we have right now, you can come back like an hour later and then think to yourself, oh my gosh, if I would have just stayed in, it came right back to me and now I've taken a loss for no reason. And that's really a struggle in this like range bound activity, because it's true, like we've been seeing, price can go up to like 41.50, come down to 41.10, come right back up to 41.30, back down to 41.20. And so there's this feeling that, oh, maybe it's just a pump and dump and it'll come right back to me. But actually it's in these markets where you can get chopped up that you need to be even more diligent to be really clear on what your parameters are, so that you don't end up like sticking in it and then you end up taking a massive loss that takes weeks to kind of clean up after. And
Exactly.
so,
I
yeah,
normally tell people I'm not a trader. I am a risk manager. So I tell people, if you can manage risk, like literally manage your risk, you can trade. You can lose 10 trades and that one win will overshadow the 10. But if you don't know how to manage risk, your one trade will wipe you out for the rest of the week.
Yeah.
And so you have to be able to say your ouch or your pride, because I'm a Virgo, we don't like to be wrong. It took me a while to realize I'm not wrong. I'm just not right now. And so I have started to say, I can take a hit, right? So especially in the CL, I'd rather risk 13 ticks and take $130 loss, because I know she will easily spit 7 to 25 quickly and I can get it right back. So for me to take a hit, manage it, reassess, because even if sometimes it's just a deep pullback, if I believe in the move and she's still going in my direction, then I can manage to get back in, because the pullbacks are normally when she thrusts forward, my reward is less than the risk. So if I'm risking the 13 ticks and that's normal, a nice space, especially if I'm entering at a spot that I call natural support and resistance. And I told y'all what those are earlier. I'm looking for natural areas to enter. That risk is going to be minimal for where I'm looking for a reward. So I look for those opportunities in the market that I know. It took me a long time to get to the point where I'm like, okay, go ahead and take the hit, because I'd rather take $130, $200, $260 if I'm doing 2 contracts. I'd rather take that risk than to dig myself out of $1,200.
Yeah.
That's where I used to be.
That's absolutely true. It's absolutely true.
Because it's taxing.
And that's actually something that like I really appreciate about you and the Unknown Trader and Kingdom Wealth. Like the ethos is so much that, it's better to be consistent doing something well consistently than to try and constantly get these home runs. Because the thing is that pitchers actually, or not pitchers, but those home run hitters that hit those home runs, they actually have often a very bad batting average. And people forget that people that are working towards getting like one massive hit, either they're training for an excessive amount of time for that one moment, like people who train for the Olympics, they train for years and then they just have like that one moment that they have to do a really great job. But then you have to have a lot of patience. Like if you're looking for that home run, then you need to be willing to sit in front of your charts the entire day, every single day, and be really patient. If that's not your personality, if you're not going to be Usain Bolt, then, be somebody that's like, okay, I want to be healthy and I need to jog a couple, like a mile a day. And
I just want to be Flo Joe. Just want to be in and out. I want to, and I
so,
want to look good as I do it.
So, and I really appreciate that you guys create so many challenges that are so accessible to people, whether it's the $50 challenge or the $200 a day challenge or the 15% challenge. I really appreciate that about your group, because people at all different levels, there are some people that they need the challenge. So, a $50 a day challenge to them might not be pushing them, so they're not like getting into that focused zone. But then there are other people that, that they could do $300 a day or $500 a day. But if you make that a requirement, the stress of it is so crippling. So allowing, when you have 400 or 500 people in a group, you do have people with completely different temperaments. And so you have to know, do you have the chihuahua in your group that's like constantly like shivering at every move of whatever the underlying's doing? Then the $50 challenge is perfect for them. It's not going to set off all of their nerves. But if you have someone that is like the German Shepherd of the group, then fine, let them have that, those bigger challenges that push them, that they can concentrate through, that they can focus through, that, like exerting those, that muscular structure, fine, then do that. But I think oftentimes people are trying to emulate a kind of trader that they're not going to be, because they just don't have that temperament, or they're emulating a trader that is just a fake guru. And
not
and
just that. A lot of times I tell people there are different pocketbooks, right? And what I learned with dealing with different traders are the ones who like their job, right? They trade a certain way. The ones who don't like their job trade a certain way. Those who have capital, right, and have a relationship with money where it's not, how can I say? I can't think of the stress of the money. Not just that they don't have the stress of the money, but their relationship with money is more of, I'll get some more, for me, if I blow 50 grand, I'm I got kids and all this, and I want to leave the US, and then, I'm like stressing, like the wine is full. But there are those who have 50, so I have this one trader, and he always hits the home runs, right? And so one time he posts a loss, and his loss was, like my heart was like, are you okay? And men and women are different, right? We always say men and women are different. And he was just like, what was me panicking or boohooing about? And he could see if it was the trade going wrong, because he was wrong in his trade, but circumstances, the internet goes out, shit happens. So that was one of those, but he was so focused in, okay, that's gone. How do I get it back? Like, what do I do? And so boom, boom, he got, his mental capacity was different than most who would have, it was a Friday, they lost 50 racks. They would have spent the entire weekend
just like their stomach
going
grinding
through the charts. Or going through the chart. I would have, I wouldn't have been able to recover. I would have been still somewhere in the ball crying. And he was like, what was the crying going to do? I was like, I don't know, but I would have felt better. He was like, that wasn't going to give me my money back. I was like, no, but I would have probably thought Monday, But he was like, I was not going to the weekend with that loss. And so I was like, I need to tap into that mentality of, okay, this crying is not going to get you, this self-sulking, like, especially if you believe in your move and what's happening. Like, when we started doing the open trade on the CL, I told Nancy, I was like, oh, I got tapped out. She was like, but it didn't come back to the bottom of the box. I was like, no, but my risk factor was 50% of the box. She was like, but that's not the rule. And I was like, but my mental capital was only 50%. She was like, well, then that's why you got tapped out. I mean, I had to get back in because it did go in the direction I was, but the pullback was more than I was willing to take. But had I followed the regular rules of being at the bottom of the box, I wouldn't have been tapped out. But I know my risk capital and I know my mental risk capital is you need to be at 50% of the box, because if not, then I'm over here like stressing, and I don't want to stress. I want stress-free trading. And so knowing your mental capital and where you are, and then being realistic in what you're willing to lose. Because sometimes people do prop trading and they're like, oh, I only, I pay 18 bucks or I pay $36 for a $50,000 account. It doesn't count, or, or they get a funded account and they blow it. No, you need to act like that's your money. You need to trade because you have the opportunity, right, to have that in your account. And now you negate and waste time trying to do that again. So why not take your time? $50 a day is easy peasy. Even on a bad range day, 50 bucks, I don't care if you do it one tick at a time, can be done. 2 ticks on the bonds. Bonds will give you 3. So getting 2 ticks on the bond, if you know direction, she gonna give you 3. And all you need is 2. So being able, because the bond is $31.25. That is why I love the bonds. Because they pay well. So the silver is $25. Those two, their tick value, you can easily, especially if you know direction, you can easily make your $50 a day. So I always tell people, knowing your mental capital and being able to discipline yourself helps tremendously, especially not looking at someone else's race. There's a reason why horses run with blinders, because they only want the horse to focus on the finish line. They don't want them looking off to the left. They don't want them looking off to the right. They want them to focus on the finish line. And I tell people all the time, run your race. Don't worry about what XYZ, because they have a different bank account than you. They have different expectations than you. They have different, their livelihood is different than yours, and you can't have their expectation for you. And once you realize, if I run my race, if I make what I need to make, not what they're making, because their bank account is not in your bank account. If you make what you need to make and be consistent with it, in the long run, that's where the goal is.
It's absolutely true.
That's where it lies.
So thank you so much for this presentation, the intro to bonds, and even just talking through like the psychology of what it is to be a consistent and profitable trader. I think that those two words don't always go together. Like, people can be consistent, and but being a consistently profitable trader is not easy. And also people can go through a lot of seasons of like being way up and way down, but trying to figure out where that kind of like, where your middle ground is, so that you have a repeatable process. And everybody has down weeks, or but you don't want to have like a down quarter or a down year. You want to be able to like get back up and get back into it, because I mean, you don't want to spend time doing working on something that you feel like isn't actually like taking you to the next level. So being consistent and managing expectations helps you be consistent over and have that longevity that you're talking about, because you're really tapping in and protecting your mental health while, you know, being profitable, because you're not putting that pressure on yourself to be, you know, to be the next Ray Dalio or whatever. But for those in the trade speakeasy, we are working with Lakeysia to come in and maybe do some classes for us, so that, you know, to really get into some of these different underlyings and to help you guys take some of what you're learning with, you know, with trading options, but actually being able to explore that a little bit more with futures. So hopefully in the future we'll have some, you know, some classes available to you guys the same way that we did with Larry, and hopefully some of the other ladies from Stock Talk, from Kingdom Wealth, from all the different groups. There's so many groups. We'll also be coming in to talk about some of their like key money making strategies, whether it's with options or and in equities or with futures. So I'm just really grateful and thankful for your time, Lakeysia. And we actually have the same birthday, and we're both from Houston. So I feel like so when you were talking about the mentality of a Virgo, I was like, is she talking to me? Is this personal? No, but no, I'm genuinely thankful for your time. I mean, over the last 3 years, seeing how you trade, how you have continued to grow in your trading, gave me a lot of conviction that, you know, I don't want to introduce everyone to the Trade Speakeasy members. I want to introduce them to people that I genuinely believe are consistent, profitable traders. And, you know, people like you and Larry and others in the groups have demonstrated over a very long season of time that consistency in the profitability, the consistency in being able to show up and trade well in different markets. Because now we had this huge bullish market, then we had this the more bearish market with these bull market rallies and the bear market rallies, and then now we're seeing some kind of ranging. We're not sure if we're changing the trend or not changing the trend. Lots of inconsistent data. You know, I'm bearish, but with the volatility this low, it's like it's going to take us maybe the entire year just to slowly bleed out. You know, I feel like a bit of a hemophiliac in this market. You just take
the VIX is doing this. The VIX is doing this.
Yes. And exactly. But when will it do this is the problem.
Right. It's basing. It's basing. And I'm like, okay. But I tell everybody, you know, mentally I'm bearish. Right. Mm-hmm. Overall, I'm bearish, but depends on the day, because the bulls are like, yo, we're still here. And I see bullish moves well. But because we've been so bearish, right? You have to be able to see both sides, you know, and to be able to be flexible in, even though it's uncomfortable, you have to be able to be flexible in how you trade, because you could be sitting here waiting on the bulls to come in, and they'll come, but they may not come with force. So it limits your opportunities, especially in this bearish market.
Yeah, that's definitely true. So yeah, like I said, thank you so much again for your time. And for those that are watching this later, if you are not already subscribed to the channel, please subscribe to the channel and click the bell so that you get the notifications. I'm Suzanne at the Trade Speakeasy, and CBD Queen, or Lakeysia Briscoe, is from My Jamii Life, and you can find her there on Instagram. And if you join the Trade Speakeasy newsletter at the website, it's free, then you will also get access to my Telegram and a lot of the members that you have been introduced to through the channel, whether that's Winston with MetaRise or the Unknown Trader, or now CBD Queen, you will be able to find them also in our Trade Speakeasy Telegram. So join us and you will be introduced to a wide array and range of different kinds of traders that I believe are profitable and educated, well-educated and knowledgeable in their fields. And that's why I am asking them to present themselves to you guys so that you know who you can like possibly reach out to for more support or even educational material that will benefit you guys in the future going forward in your trading journey. So again, thank you so much, Lakeysia. And I hope you guys all have a wonderful Saturday evening. And well, for us in Germany, it's already Sunday. So happy Sunday and have fun with your family and the prom evening and enjoy your wine.
Thank you. Y'all have a great one. Have a good night.